These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%, and then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing.
The spot Bitcoin ETFs have now been trading for 2 months, and their performance has been awe-inspiring. According to the latest update by senior Bloomberg analysts Eric Balchunas, the ETFs now have over $55 billion in assets, with exactly double that in volume at $110 billion. In my last video update, Eric Balchunas commented on how remarkable these numbers are for an ETF that is only 2 months old. While Eric is celebrating the early charge of the Bitcoin spot ETFs, Real Vision's finance founder, Raoul and founder at 10T Holdings, Dan Tapiero, believe that there is so much to look forward to from the ETFs. In Tapiero's words, this is not even the beginning of the beginning. Take a look at the rest of this video to hear about Raoul and Dan's projection for the next wave of investment to come into Bitcoin from the ETFs. And, as always, please don't forget to like and subscribe to this channel.
All that's happening really right now is RIAs. Now, you've got to understand how these RIAs work, and Dan knows them because a whole bunch of investors in his fund. These guys are networks. They're not like brokers get on the phone like buy, sell. They go and have a steak dinner with their best client who talks about this Bitcoin ETF. They're like, I'm not sure. They read Barron's that week. They're like, I'm not sure if it's the right thing to do. They then go and play golf. Their other client talks about it. And eventually, you know, this huge property developer from Cincinnati then sticks in, you know, $5 million into the ETF. This is the process. So it's actually really slow. And we've only just started. And a lot of these people are driven by price.
That's what you said.
If you look at NVIDIA, you see how price feeds on itself. It becomes reflexive. So we've just started. These guys are not traders in the whole. These RIA networks generally talk to their clients about, you should think about an X% allocation. They put an X% allocation, or they mandate it and say, hey, we're going to do this for you guys. They do it. And then what happens is, Dan and I have seen this all the way through with friends of ours. They start with 1%. And then before you know it, they get up to 5%. And they're like, fuck it, we're going to 10%, because they start to understand the power of this thing. So it becomes very reflexive in price action. You know, I've seen family offices. I've got one of the investors in my fund is a big Australian family office. At first, their allocation was 1%. They probably got up to 20% in crypto allocations in the end, because you know, once the principal started to understand it, that it just keeps building on itself, and the price action just builds on it. So we've, as Dan said, we're really, really early still.
I'd say that also many people, you know, will do a dollar cost average. So this is, someone will say, okay, I'm going to 3%, and they do 0.5% every quarter for the next, you know, few quarters. So I think there are a lot of people who purchase things like that. No one is, I mean, no. Very few people just come in and say, okay, put 5 million in, it's an all-time high, I don't care. A lot of those guys will do, you know, so I think that you have to expect that there's a tail to many of these purchases that Raoul's talking about.
And then there's also these massive platform models like BlackRock, Fidelity, Morgan Stanley, JP Morgan, that suddenly add it to their asset allocation mix. And those guys control like $1 trillion of assets. So once they do it, it's the same process. It then starts dollar cost averaging in. And, you know, we've seen BlackRock talking about doing that. I don't think it's even started yet. So those massive pools of capital start coming in as well. And we're not talking institutions. None of the institutions are in yet, really. Also, don't forget, the 401k bid in America is another big thing. One of the reasons passive funds have outperformed active portfolios, like the NASDAQ and the S&P keeps outperforming, is because millennials every 2 weeks add to their 401k of this stuff. They can now add Bitcoin into their 401ks. So that becomes a every 2 week bid that goes in perpetuity forever.